Okay, let's talk about Nvidia. The company is an absolute titan, the undisputed king of the AI era, and it feels like it's just completely rewriting the rules. But as its value soars into the trillions, yes, trillions with a T, there's this ghost from tech bubble's past that keeps popping up. So today we're asking a really fascinating question. Is Nvidia's incredible story just a repeat of a chapter written by another chip giant, Intel, right before the dot-com crash? Let's dive in.
First, to get a sense of the sheer scale we are dealing with, just look at this number, $57 billion. That is what Nvidia is projected to make in revenue for a single quarter in late 2025. I mean, that figure just completely dwarfs what the giants of past tech booms were making in an entire year. It's a number that's almost hard to wrap your head around.
You see the meteoric rise, right? The total market dominance, that feeling in the air that this time is different. It all just feels so familiar. So the big question is Nvidia truly building a brand new future? Or are we just watching a replay of Intel's journey to the absolute peak of the dot-com bubble, right before the big fall? That is the mystery we're going to try and solve today.
To get to the bottom of this, we're going to approach it like a detective story. We've got 4 key clues to investigate: the economic world they each operated in, the financial fingerprints they left behind, the health of the whole ecosystem around them, and of course, that looming shadow of competition. Once we've examined all the evidence, we are going to deliver our verdict.
Okay, first things first, let's set the stage for our investigation. We're putting 2 heavyweights side by side. Nvidia, the undisputed champ of today's AI revolution, and Intel, the ghost of bubbles past, right at its peak back in the year 2000.
What's so wild here is just how powerful this parallel is. Both of these companies, in their time, became the one and only place to get the picks and shovels for a technological gold rush. I mean, if you wanted to build a PC in the 90s, you pretty much had to go to Intel. And if you want to build an AI model today, well, you need Nvidia. They were and are the gatekeepers to the whole revolution. All right, on to our first clue, the different economic worlds. See, to really understand these companies, you can't look at them in a vacuum. You have to understand the macroeconomic winds that were powering their sales. This is a super crucial piece of the puzzle.
So, Intel's boom, it was really driven by 2 things that weren't gonna last. First, you had the Y2K bug, which forced every company on Earth to do this massive one-time IT upgrade. It was spending out of fear, not organic growth. Second, telecom companies, loaded up with cheap debt and pure hype, were building way more internet infrastructure than anyone needed. Nvidia's demand, on the other hand, it's this super concentrated arms race between a few tech giants who are terrified of getting left behind in AI.
And here's the bottom line on that. Intel's customer base was really broad, but a lot of them were financially shaky. Nvidia's customer base, it's tiny, basically a handful of these giant hyperscaler cloud companies like Amazon and Google. But they are sitting on actual mountains of cash. So on one hand, this makes Nvidia's foundation look way stronger, but it also means the risk is insanely concentrated. I mean, literally 1 or 2 CEOs changing their spending plans could send things off a cliff.
Okay, now for our second clue, the financials. And this is where things get a little deceptive. The big picture stories are different, sure, but the numbers, they might share some familiar fingerprints. Let's see what the balance sheets tell us.
Wow. Just look at this table. It's staggering. Nvidia's quarterly revenue is more than 7 times bigger than Intel's was at its absolute peak. And its growth isn't just steady, it's exponential. And that gross margin, 73%, that's just unheard of for a company that sells hardware. But here's the kicker. Notice the PE ratio. Intel stock was flying high because its valuation was expanding, but Nvidia's, its price is being driven by absolutely explosive earnings growth.
And that brings us to a really surprising conclusion. If you just look at standard stuff like the price-to-earnings ratio, Nvidia today actually looks cheaper and, more fundamentally sound than Intel did at the very height of the dot-com bubble.
It seems a little too good to be true, doesn't it? I mean, if the numbers look this reasonable, where's the risk? Well, this is where the story gets really interesting.
So the catch is a little thing called the PEG ratio. See, Nvidia's attractive valuation, it's like a tightrope walk. It only looks cheap because everyone expects it to keep up this insane, almost impossible level of growth. The second that growth slows down from, say, superhuman to just really good, the whole valuation model just shatters. The risk isn't the price today, it's the incredibly fragile pedestal of expectation it's all built on.
So for our third clue, let's look at the ecosystem itself, which might be more fragile than we think. We're going to widen our investigation now from just the company to the world around it. Are there any signs of stress in this whole AI gold rush?
To understand this risk, we have to talk about another company from that era, Cisco. Back then, telecom companies were convinced that internet traffic would double every 100 days, so they laid millions and millions of miles of fiber optic cable that was never even used. It was called dark fiber, and it's the perfect monument to building infrastructure based on pure hype, not actual, real demand.
And that brings us to this really powerful quote from Michael Burry, the investor who famously saw the 2008 crash coming. He calls what's happening today in AI a supply-side gluttony. And it forces you to ask the question, are the big cloud companies just building the digital version of dark fiber? Are we creating dark silicon?
And this chart really shows just how precarious that whole situation is. Around 40% of Nvidia's massive data center revenue comes from just 4 companies. Just think about that for a second. The fate of a multi-trillion-dollar company literally rests on the annual budget decisions made by a handful of CEOs. That's not a foundation, that is a knife's edge.
Okay, now for our final clue, the shadow of competition. Let's take a hard look at the storm clouds that are gathering for Nvidia, because they look a lot like the ones that gathered for Intel. No king rules forever, right?
Intel, back on the day, faced one single but very dangerous threat. AMD came out with its game-changing Athlon chip. But Nvidia's situation, oh man, it is so much more complex. It's fighting a war on 2 fronts. It's got a newly energized AMD at the gates, for sure, but it also has something way, way more dangerous. Its own customers are building custom chips inside the castle.
And this right here, this is the existential threat. Google's TPU, Amazon's Trainium, these are custom-built chips designed to do one thing and one thing only, replace Nvidia. For certain high-volume AI jobs, they're often cheaper and more efficient, so Nvidia's biggest customers are actively trying to engineer them out of the equation. That is a nightmare scenario that Intel never ever had to face.
Okay, we've examined all the clues, we've looked at the evidence, now it's time to put it all together and deliver our verdict. Exactly where is Nvidia on Intel's 2000 timeline?
Well, we can use a little process of elimination here. It's not 1999, Nvidia is way too big and mature for that early growth phase. It's not March of 2000, which was the absolute peak of the stock market mania. Nvidia's valuation is actually better supported by its earnings. And it's not September of 2000, because the company hasn't shocked the world with a sudden warning that revenue is slowing down. At least not yet. And that leads us to our verdict. The evidence suggests that we are in the summer of 2000. Now this was that quiet, really precarious moment after the peak hype, but before the crash. It's that moment when all the quarterly earnings reports look absolutely perfect, the CEO is on top of the world, but deep down, underneath the surface, the cracks are just beginning to form.
And this leaves us with one final, provocative question. Intel's crash was triggered in September of 2000 when it warned about slowing demand in Europe. So, what's going to be Nvidia's September moment? Will it be one of its huge cloud customers finally tapping the brakes on spending, or maybe a quiet revelation that their own custom chips are taking over more work than anyone realized? You know, history never repeats itself exactly, but it often rhymes. The only question now is when we'll hear the echo.